Welcome to Bang Bang Trading's 30-day bootcamp. I hope you're excited, because today we're going to start the learning process. By now you should have your platform chosen, your economic calendar set up and accessible, ready to go, as you are not allowed to even open your charts or trading platform until you've looked at your economic calendar and your charts set up for the pre-market game plan. Ready to trade. If you have all the done, then, today, you are going to be learning the range strategy, also known as sideways movement. It's an extremely powerful strategy, and works if you follow it 100%. Do not deviate from it at all. And remember, you are only allowed, and I repeat, only allowed to trade in the simulation account. And you are only allowed to trade one contract. You must use a stop loss and a take profit. Do you understand these simple instructions? One contract, stop loss, and take profit. If you fully understand this, let's begin. I'm not trying to be repetitive, but you must follow all our instructions 100%. You came here for a reason. Right. Maybe you're a new trader, wanting to learn, or a losing trader, wanting to become profitable. Whatever the case may be, you must be willing to listen and follow instructions to the T. Now let's get into the charts.
Today we will cover how to identify a range and add a no trade zone correctly. By the end of day 6 you will be able to spot and set up ranges in the market, as well as how to properly trade them.
Good morning, trading family. So today is actually the day your learning is really going to start, and we're going to be discussing ranges. Okay, there are multiple ways to trade a range, and we're going to cover them all, but we're going to start off first with identifying a range on a trading chart. Okay, now you can identify ranges on multiple time frames. You can identify larger ranges. Let's look at the 1 hour chart and see if we can identify some ranges. Let's get rid of a few things here. Go ahead and remove all of them. Move these out of our way for now. Okay, so the way you want to identify a range, let's get rid of all of these. So now we have a nice, clean, empty chart. All right. So on a 1 hour time frame, okay, you can come in here, and the way to identify a range is you're looking for areas like support and resistance, which you learned, but where price maintained that level for several hours. Okay, or several days. All right, so by doing this, you're able to identify ranges on an hourly time frame. All right, now that's not as important as identifying them on your daily trading chart. I am just teaching you how to identify them on higher time frames. Okay, you're looking for areas where price traded within a range for several hours or possibly several days. So you can identify that area and mark it off if you happen to see it forming on your chart at the current trading hour. And right now we can clearly identify that on our current 1 hour time frame. All right, notice price tried to break here, 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 and here. Okay, so this will be very beneficial to us once we go into our lower time frame. So now that we identified this area as a range, okay, again, we're looking for areas where it tried to break out of but couldn't on both sides, and both sides were equal. That is what we call a range. Okay, where the price action is trading within a range. So since Monday, Tuesday, Wednesday, and Thursday, which is the 27th, the stock market has traded within a range. Okay, does everybody see that? Does everybody understand it? We are looking for areas where it couldn't break above and it couldn't break below. Okay, that is called a range. That means the stock is just going from point A to B, point A to B, point A to B. It's trading sideways. Although it's moving up and down, it's trading within a range. Okay? Very similar to support and resistance. However, this would be considered a range. So let's go ahead and mark off that range. Come to your drawing tools, click on rectangle, start at the high, and come down to the low. Now let's open that up and see what it looks like. Okay, looks really good. What you're looking to capture is the close of the candle, not the candle wick, but the close of the candle, not the candle wick. Okay? Now that we've identified that range, we marked it off, let's go ahead and change this parameter and make it a box. So to do that, you have your cursor, hover it over it till you see the little hand. Cursor, hand, cursor, hand, cursor, hand. Double click. Change the background. Just bring the opacity on the background down to 0 and change the borders to purple. And then let's change the border thickness to as thick as we can. Okay, now we have a range. We don't have the range of the wick, we have the range of the actual candles. Okay? So you just successfully identified a weekly range because we're on Thursday, and since Monday it has been in a range bound movement. Okay? Make sense? Awesome. Now let's jump into our 2-minute time frame. Okay? Can we go 30 minutes? Sure, we can do that. Okay? We can identify more ranges in the 30-minute. All right? This could be considered a range. All right? Even if you started it over here, it can still be considered a range. Okay? But we're not looking for the ranges on the 30 minutes. If we can identify a range on a 1-hour time frame, that's going to be your best place to start. Okay? This way you have an idea, again, of like support and resistance. Okay? You have identified an overall big range. Okay? Previous to today's movement, the range would have been here. Okay? And we could have identified that on this 1-hour time frame. All right? So now let's go to our trading time frame, which is the 2-minute chart. Okay, now on the 2-minute chart, notice the hourly range is still marked off. Okay? But now our 2-minute chart is our trading chart. So let's just say we came into the markets this morning or last night. Or no, let's go with this morning. Doesn't matter what time you come into the markets. You're looking to see if you can identify any areas of a possible range. So let's say we came in the market today right here. Let's call it 130. Okay, could we have identified any areas as a range? Sure we could. All right? Sure we could. We could have identified this area as a range, and we'll bring it right up to our time frame. Okay, notice we marked off the high and we marked off the low. Okay, so we could have treated this as a range. All right? So we marked off and found one range. Now let's mark it off the real way with our drawing tools. Okay? And now we have a range. Let's go ahead and double click. Bring the opacity to 0. Make our borders purple. Make our thickness such as that. And now we have a range. Let's go ahead and see if we can identify any more ranges. Okay? Do you guys see any more ranges on our 2-minute time frame as we go? There are very small ranges. Okay, very small ranges that we could identify. All right. But right here we have another beautiful range. Why is that? Because price tried several times and couldn't break through, and it tried several times and it couldn't break through. This one might have been a little tricky for you to identify because the market was in a downtrend, okay, but it ended up turning into a range. All right, so some of them are not going to be easy to spot for you right away because you're new at this. You don't know what a range actually is. But let's go ahead and mark off this as a range. Okay? So we're going to start here. Bring it down to the close of our candles. We're going to double click. We're going to bring the opacity to 0. We're going to make our borders purple. We're going to make our line as thick as possible. Okay? So now we have just identified a range on the higher time frame, the 1 hour, and now we've identified ranges within that range. So, great job. That is how you successfully identify a range, okay? This range right here might be contradictory to what I'm saying about identifying areas where it tried several times, okay? But since we came in right here, we could consider this a bigger range. But for the sake of identifying the range, all right, this would have been your actual range. Okay, so forgive me for drawing the bigger range. I'm thinking on a different level. I have to remember I'm training new people how to identify a range. Okay, so here we identified 3 ranges, and we identified micro ranges as well. Okay, remember, you're looking for areas where price tried to break several times on both sides and failed. Okay, this here was almost 30 minutes of sideways movement. Okay, so now that we identified those 3 areas, let's go back in time and see if we can identify any more. Can you guys identify any ranges in this area? Let me go ahead and mark off our area. And you tell me, can you identify any areas that we would consider a range? I'll give you a minute. If you identified this area, if you identified this area, you would be correct. And if you identified a bigger range, you would be correct once again. Okay, so ranges come in many different sizes, many different lengths or widths, okay, and many different heights. All right, they're all going to look different. They're not going to be identical. Okay, so learning to spot them can be tricky as a new trader. Let's go ahead and see if we can come back and find some more. Okay, can you guys identify any ranges in this area? Can you guys identify any ranges in this area? We're looking where price has rejected several times, okay? And price could not break through several times. All right? Let's go ahead and identify our ranges, okay? This would have been a good range to mark off. If you picked this range, good job also. If you picked this range, excellent work, okay? Again, there's several ranges within this big range, okay? There's several areas you could have marked off as a range. Right now, I just want you getting in the habit of being able to identify what a range is. Okay? Identify what a range is. 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 Okay? A range is nothing more than sideways movement that has tried to break out on the upside and the downside and failed. Okay? Sideways movement where it's tried to break out on the upside and the downside and failed. Okay? Let's go back a little bit more. By now you should be getting the hang of it. Alright? Let's see if you can identify any areas where price has ranged. Go ahead. I'll give you a few minutes. Remember, we're looking for sideways movement where price has failed in both directions. If you pick this area right here, excellent work. All right? If you picked this area right here, excellent work. If you picked this area right here, excellent work. Okay? We're looking for areas of sideways movement. Okay? So, I hope this helps you learn to identify a range. Okay, we are on a 2-minute time frame right now. All right? Now, this is the current price where price is at on a 2-minute chart. Could we set up a range right now based on price action? What would you think? Sure we could. Okay, first we had a range right here. Now we have a range. We could mark off a range right here. Okay, we can mark off a range right here. This would be considered as prices ranging within a certain area. Okay, you want to look at the big picture. That'll help you determine better areas for trading. Okay, right now price is having a tough time breaking out to the upside, and we won't have a definitive bottom until price comes back down. But as price is unfolding in real time, this is how you would want to identify a possible range. Okay, it failed to break out above us, it failed to break out below us, it came back up to us, and now is it going to make its way down below or come back up again? All right, so just being able to identify it in real time is more tricky than, you know, coming in and seeing an actual range and you're ready to trade and you could trade that range. Okay, are you with me? Now this range here is a little bit different than this range here, right? It's a range within a range. Okay, so there's several different ways to identify the ranges and to trade the ranges. The more time you have practiced finding and identifying a range, the better your ability will become to spot a range. Okay? You don't want to micro pick them and pick every tiny little range, right? Every tiny little range. You don't want to get micromanaging on your ranges. You just want to start identifying the ranges, okay? Can you identify sideways movement where price had hard times breaking out in either direction, okay? Now let's go back a little bit more and see if we can't find one last final area. This looks good. Oh, we already did that one. Okay. Do you guys see any ranges in here? Possible ranges? In this area? Hopefully it's standing out like a sore thumb, right? Price was having a very hard time breaking out of this area to the upside or the downside. Okay? Now I'm going to turn it back over into the animated learning room. And I have some screenshots and I want to see if you guys can identify ranges. And then we'll jump back live into the charts. See you on the other side, guys.
Hi, I am Ryan and I'm going to introduce you to a range. First off, what is a range? A range is defined as a consistent high and low in price in a security over time. Meaning that when a certain price level is reached, the security will reverse and head back towards the previous price from which it came. So in layman's terms, it is when the price of a security can't break above or below a certain price level within a certain time frame. This might sound confusing, but I assure you it's not. In fact, I'll show you. Let me just grab a few things and I'll be on my way. Wow, y'all must be doing amazing. They just called me in from New York to come down here and teach you the range strategy. I'm super excited to get started, how about you? Awesome. Now there's a lot of moving parts to a range and a ton of information to cover, so this is the time I need your complete undivided attention. If there are any distractions around you, now is the time to get rid of them. Again, your attention needs to be here, 100%, so if you're ready, and all distractions are gone, let's jump into the classroom, and start learning. So let's begin. Here is a 15-minute chart. Can you see any ranges? Remember, you're looking for places where price had trouble breaking out of. If you picked this area, great job. Now I want you guys to give it a shot. Here's a 15-minute chart. See if you can find any areas where we could potentially range. If you picked these three, you're doing good. You're getting the hang of it. Now let's jump down to a 2-minute time frame. Can you find any areas where we are ranging? Go ahead and take your time. Remember, you're looking for areas where price has been rejected more than once. If you marked off this area as a wide range, excellent work. And here's 3 more ranges within a range. Great job, guys. I'm proud of you. You're doing good. Now let's have a look at the live charts again. Here is another 2-minute time frame. Go ahead and see if you can identify a range. If you picked this area, good job. Remember, a range consists of an area where price cannot break above or below over a period of time. Now we're going to discuss how to set up and find your no trade zone. Your no trade zone is an area where you must not take any trades under any circumstances at any time. The no trade zone is considered an area where manipulation is at its finest, and you want to avoid that area at all costs. The first thing you want to do is mark off your range. A range can be broken down into 4 equal parts: 25%, 50%, 75%, and 100%. You want to identify the 50% mark of the overall range and mark that area. The no trade zone will consist of 50% of your overall range, so when you identify the 50% mark, go up 25% and down 25%. And this will give you your no trade zone, and leave you with equal amounts on either side of your no trade zone. Now that you have your range successfully set up with your highs, your lows, and your no trade zone, you are ready to begin trading it. Now there are several ways you can trade in a range. The first is buying the lows at the bottom of the range, going back up into the no trade zone. And the second is selling the tops of the range back into the no trade zone. You never want to sell out of the no trade zone at the bottom, and you never want to buy out of the no trade zone at the top. You are only looking to trade a zone the way we just described. Again, you only want to sell at the highs and buy at the lows of the overall range. And remember, you are never to trade in the no trade zone. Next, we're going to take a quick look at the RSI, also known as the Relative Strength Index, and talk about divergence. Just to give you a basic introduction to the Relative Strength Index and how you can incorporate it with your trading decisions to identify high probability setups from the top of the range and the bottom of the range. In the first example, let's discuss selling the highs of the range. Now if you look at the Relative Strength Index, on the bottom, you will notice it made lower highs compared to the price action, where it made higher highs. This is called divergence, which we will discuss more on next. Again, this is just a quick little introduction to prepare you for what's coming up. So notice the divergence between price action and the RSI. One was making higher highs, and one was making lower lows. In both examples, this is indicating that price is getting ready to reverse. So not only do you have price action trading at the top of the range, you have confirmation on the RSI, called divergence, that a high probability setup is about to occur, and you should be getting ready to take your trade. Now, let's look at buying back into the range. Notice, price action is making lower lows, but the RSI is making higher lows. We're now trading at the bottom of the range, and we have divergence on the RSI developing, so we should be preparing to take our trade, to go long back into the range. I know this is a lot of information to digest all at once, but don't worry. Once you begin to understand it, it's pretty easy. Now, let's jump into the live charts and see it all in action.
Good afternoon, trading family. We are back again. Okay, so by now, hopefully you are getting a better perspective and understanding of what a range consists of, okay? A range will consist of an area where price failed to break out on both the upside and the downside over a span of time, okay? Where price just kept rejecting both areas over an expansion of time, okay? Ranges can last anywhere from several minutes, several hours, several days, okay? So now that you've had a little introduction to identifying ranges, we're going to move on to how do you trade a range. Let me back that up. How do you set up a range to trade? Okay. Now, as you can see here, we have identified a range. And we have this thing right here called a no trade zone. What is a no trade zone? Well, the no trade zone is exactly what it says. No trade. That means you do not take any trades whatsoever inside of this area. You do not take trades ever inside of this area. Question: when do you trade in this area? Never. Right. Good job. Okay. So how do we find that area? How do we determine that no trade zone? Okay, it's pretty simple. It's not rocket science, okay? What you're going to do, once you mark off your zone, all right? Once you mark off your zone, you are looking to find the halfway mark, okay? This will be the easiest way to explain it. Find your halfway mark, okay? And then draw a box around it that would be equal on both sides. Make sense? Okay, or another way to do it would be find your halfway mark, find your 25% mark, and find your 75% mark. And that would be your no trade zone. Okay, either way you do it is fine. What you're looking to capture is the meat and bones of the overall range. Okay, you're trying to capture that movement in the middle, in the 50% mark. Okay, so if you were to go 25%, 50%, 75%, okay, this would then be 50%, because you'd have 25 above you and 25 below you. Okay, that's the easiest way I can explain it to you of how you're going to identify a no trade zone. All right, there is no mathematical equation to it. Again, you're just looking for a chunk of that zone where you do not want to trade. Okay, you're looking for the 50% mark in the overall zone that you have set up, just like we did here. All right, so now you've identified the range, and now you've identified the halfway mark, 50%. Okay, if you started with a line in the middle, then just go 25% up and 25% down, and now you have successfully completed your no trading zone. Now, why don't we want to trade in that zone? Because the price is going to be much more manipulated in this zone. Okay? The odds are not in your favor to trade in this zone. And they are not high probability trades when trading a range. Okay? When you are trading a range, you are looking for several key factors in order to take a trade. Okay? There's multiple things working here when you're in a range. All right? First, let's discuss what this is and this is. All right? All that is it represents the 25% on either side that you did not mark off, okay? And that is the area where your range should stay within. I'm going to call this the money zone, okay? We'll call this the money zone. All right? This is the zone where you're going to make money. This is the zone where the probabilities and odds are going to be in your favor. In this 25% up top and the 25% below you. Okay? So now that we have this identified, and your no trade zone identified, what comes next? Well, now we want to know, okay, we've identified all these areas. We have marked off our no trade zone, which means you do not trade anywhere in this zone under any circumstance for any reason. Okay? Never, ever, ever, ever trade in this zone. We are looking for high probability areas to trade back into the range. Okay? So one way to trade the range is to short it at the top of the range and to buy it at the bottom of the range. You can short it at the top of the range, meaning sell it, or you can buy it, meaning buy it, at the bottom. Okay? Under no circumstances are you to buy above the no trade zone. You are never going to buy this above the no trade zone unless certain criteria is met, which we will get to. Again, under no circumstances will you ever take a trade in the no trade zone. Ever. Okay? I'm going to repeat that 100 times. I want to bang it into your head. Under no circumstances will you ever trade in the no trade zone. Okay? Under some circumstances will you be looking to buy above the no trade zone. Okay? Under some circumstances you will be looking to sell below the no trade zone. But for the most part, you are only looking to sell at the top or buy at the bottom. Sell at the top or buy at the bottom. Okay? You are never looking to buy here to go long. You are never looking to buy here to go long. You are never looking to sell here to go short. You are never looking to sell here to go short. Okay? That's contradictory to what we teach. That's contradictory to how you trade a range. Okay? The only time you will be looking to trade a range to the downside is when it breaks out. Okay? How do you know when it's going to break out? Well, we have something that we call probability and odds, okay? And we have other factors that we look at. So, first, I just want you guys to understand that the majority of the time, if you're going to trade the range, you're going to be looking to short the tops and buy the bottoms until this criteria is met that we're going to discuss right now. Okay? When price of the range, you have your 50% mark. Okay? Here's your 50% mark. When price action itself starts trading below that 50% mark without pulling back up, okay? That's when you would be looking to trade a breakout of the range, okay? But certain criteria must be met in order for that to happen, okay? certain criteria must be met in order for that to happen. Okay? If you see that you're trading in the bottom 50% of the range, and then you start trading in the bottom 25% of the range, you should be looking for a breakout of the range, okay? You should be anticipating it, all right? You shouldn't be looking to go long here, because now the criteria is met to break out to the downside, all right? What is that criteria? Let's go over it again. When price action starts to finally trade below the 50% mark, and then it trades below the 25% mark, okay, the odds are beginning to come in your favor, okay, for a breakout of the range. Now, what do we consider a breakout of the range? What we consider a breakout to be is a bar must close, okay, it must close outside of the range, okay? Here's your range line, the purple line. The bar must close outside of this purple line for you to consider taking a short position, okay? For you to consider to take a short position. Now, in this area, everything was lining up, everything looked good, but what happened? This bar, it peaked out, right? It peaked out, stuck its head out, but then it went back up like a turtle. Bing! All right? So, had you listened to our rules, you would have saved yourself from being caught in a false breakout. Okay? Even though the criteria was initially met, you're trading below the 50% mark, you're trading below the 25% mark, the candle never closed outside of our range line. All right? So don't try and be a hero and buy it because, oh, it just broke. Yeah, it did, but did it close? Nope. Don't be the hero. Don't be the guy looking for every breakout, because you're going to be the guy that gets robbed day in and day out from the markets. Okay? Our criteria was not met. A 2-minute candle did not close outside of that range. Okay? Now, if you were trading on a 1-minute time frame, you would have got faked out. Because on a 1-minute time frame, yes, the first candle closed red on a 1-minute time frame. But then the second candle came back up into there. This is why we trade on a 2-minute time frame. Okay? You're going to have less fake outs on a 2-minute time frame than you ever will trading a 1-minute time frame. Okay? Now, with that said, let's come over here and look at this. Okay? Was the criteria met? Okay, was the criteria met? Here is our 50% mark still in play, right? Price is trading below that 50% mark, right? But on the breakout candle, okay? On the breakout candle, we had 2 big red candles prior to that. All right? 2 big red candles prior to that. All right? So, although you could have taken that entry, okay? You could have taken this candle entry, right? You could have been looking to take it, okay? You would have never got the chance. Why wouldn't I get the chance? Your criteria was met, right? You were under the 50%, right? Absolutely, right? This candle closed outside of that mark. All right. Well, let's zoom in a little bit. Let's zoom in. For the traders who have been with me for a while, would we have gotten filled on that? No, we wouldn't have. Right? We would have tried to, but we wouldn't have gotten filled. Why is that, you might ask? Well, because if I go like this and place a order to sell, right? I'm going to have my order, I'm going to do that up here outside of where price is. And when that bar closes, I'm going to drag this down and put it like right there where that candle closed. Okay? Now look at that. My order would have never got filled because this candle didn't come down past the close of this candle. Okay, so that just saved us, right? It could have peekabooed. We could have got filled, right? But we would have got stopped out on that trade. Okay, so now let's go back and look. Where did price come from? Okay, where did price come from? Well, here's our 50% mark. Right, here's our 50% mark. We were trading below the 50% mark, right? But it made kind of a big, quick move down here. Okay, still the criteria was met, and we could have tried to take that trade, but unfortunately, we wouldn't have got filled, and it would have been best for us, right? It would have been in our benefit. Okay. The highest probability trades of a breakout working are going to come when price not only trades in the bottom 50%, but when it trades in the bottom 25%, like we saw right back here. Except this one failed to work. Okay, we never got a close outside of that range. So the highest probability breakout setups are going to be not here, but in your bottom 25% range. Okay? This is when you're really looking for that to be guaranteed to work. All right? So let's go back up here now. Zoom out a little bit. Okay? Now this was the candle that broke out. So our order would have been at the close of that candle, at the close of this candle. So we would have went like this, right click, had our order waiting, and then we would have manually dropped it and got filled, right? Manually dropped it. On the close of that candle, we would have wanted to be filled, okay? Now, it's going to take some time for you guys to get the hang of this, all right? So watch this video as many times as you need to, because you have to have the criteria down 100%, okay? You have to learn how to identify ranges. You have to know how to set them up correctly. You have to know where you're not allowed to trade by any means, okay? Under no circumstances ever are you to trade in a no-trade zone, ever. Okay, under no circumstances whatsoever. Don't come to me and say, hey, I set up a range and I took a trade. Where did you take a trade? Well, I traded it right here to go long. Well, why did you do that? Okay, why did you do that? When I told you specifically, do not look to trade in the no trade zone ever, period. Not going to repeat it again. Never trade in the no trade zone. There's reasons behind it, okay? The odds are not in your favor. You're not going to win in the no trade zone. I call the no trade zone the market maker zone, okay? This is where market makers come to kill trades, all right? Stay away from the no trade zone. Never, ever, 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 ever trade in the no trade zone. Okay? Now, with that said, if you are looking to break out to the upside, okay? Same criteria needs to be met. Price needs to be trading in the upper 50%, And your highest probabilities are going to come when it's trading in the upper 25%. So here was the upper 50 and it came down and failed. Here was the bottom 25% and it worked. Capiche? Comprende? Everybody got it? I sure do hope you do, guys. All right. Again, if it's not sinking in, it's going to take time. Okay. Consistently profitable traders take years to develop. I'm trying to cut that time down to a fraction for you. But if you don't listen to what I tell you, if you go out there and start gambling your money away, and you think you're that guy who can take every trade and win, well, you're not going to be here that long. I'd hate to break the bad news to you. All right? I think just about everybody and his brother has tried that route, and nobody succeeds. Okay? So now, when we are trading the ranges, okay, there are many factors to consider, like location. All right? One of the biggest things you're always going to hear me talk about is location, location, location. Okay, today, the day I'm using this for the video, just happened to be a beautiful location to trade. Okay, why? Because of where we were overall. We had plenty of room below us for a breakout to the downside, and we had plenty of room above us for a breakout to the upside. Okay? So, that location is prime for a breakout. Okay? There is nothing but space above us and space below us. You couldn't ask for a better place for a piece of real estate, right? This is a prime location. All right? You got views for days, right? Views for days. You could see so far left. You could see so far left, right? There's nothing above you, nothing below you for a little while. Okay, the problem with having a strong breakout on this trade is because of the time. It was 2 a.m. in the morning when that broke out. Okay? In order to see massive amounts of momentum, okay, if this happened 8:30, 9 o'clock in the morning, when all the traders are there, this thing would have shot down like there was no tomorrow. You could have went big and hard on that trade, okay? Now, with that said, even though this was prime real estate, guys, okay, the location was magnifico. The time was not, okay? So these are things you have to consider as a trader, okay? What times are the best for setups to work? What location is best for setups to work? All right? You're going to learn that as you grow and as you continue your journey, okay? You're going to hear these words out of my mouth time and time again, all right? What time is it? What's your location? 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 Okay? One might be prime, but the other is not. Okay? Remember, there's many factors and there's many wheels moving in the trading world. Okay? Think of it like the Flintstones vehicle. Okay? There's lots going on in the trading world. Yo, Wilma! Okay? But everything has to add up for the prime opportunities to take place, okay? Multiple factors have to come together all at once under the perfect conditions, all right? The perfect storm, so to speak. So now, let's go back in here and look at this again, okay? So if we were to trade this breakout right here, how do you know where to take profit? Well, you look left, okay? Looking at the past in trading is always going to help you with your future. All right, this first breakout candle where we would have entered already hit a target, okay? So at this time, again, even though the real estate location is prime, the time is not. All right. So even taking that trade with that and with all this room, it's kind of risky. So you don't want to go in with a big size. One contract. That's all you're allowed to trade with us in the beginning anyway. Okay? One contract. So where would you be looking to take profit if you got in that trade? Well, we're looking left. All right? Always look left. Where did price react the most? We had a reaction here. That's where the candle came out and it actually broke there. Oh, no, it didn't. That was up here. All right, where's our next target? Right here. Really not sure what's going on with the screen right now, guys. All right, and if that broke, where would the next target be? Right here. Okay, but the odds of this coming all the way to here at this time frame are next to impossible. Now, at 3 o'clock in the morning, if it happened, the odds are a lot better because that's the time the London market opens. And a lot of traders come to the market at that time in London. That's like the New York session, the 9:30 open. Okay? So before you even took this trade, you would have had to have had those areas marked off. All right? Before you even considered this trade, as you saw this setting up, okay, you should have already had this marked off. You should have said, we're below the 50% mark. Let me go ahead and get some profit target zones in place. You don't want to be doing this when the trade breaks out, okay? So you have your 3 areas marked off, all right? So now you're looking, well, that's not going to work. We'll have to do it on the higher time frame. I mean on the bigger picture here. So we're going to have to redraw them is what I'm trying to say. All right, look left. Where is price? When this breaks out, what's our potential profit zone? Okay, there's your profit zone 1. Here's your profit zone 2. Okay, and notice it broke right through 1 and it ended up coming down to 2, but not in that initial move. Okay, we're looking to capture that initial breakout period, very specific area. We want to be in, we want to be out. All right, we want to be like a Navy SEAL, okay? We want to get in, we want to get out. We don't want to be seen by anybody. Make it as fast as you can. This is why it's so imperative that you are prepared and you have these locations marked off, okay? So the second that breaks, you already have it filled. And you can come up here and you can set your position size, all right? Now, if you plan this, okay, you're looking for a potential 2290. So that was a $30 move. All right, potentially a $30 move, okay? But your first target was only, if you go from here, your first target would have been a $10 move, okay? So you don't know how big that first candle is going to be. All right, you don't know how big it's going to be, right? Nobody does. You don't know if it's going to close out, close this big, close this big, close that big. You don't know. All right, so that's kind of one of the things that you can't really predict. All right, so to have an order in place already done, okay, you know that you have the potential, okay, you know that you have the potential to move $30. All right, so what you can do is set your zone up, all right, put it on dollar value, take profit at, you don't want $30. $30 profit would be a $60 profit. A $30 move would make you $60 because you're getting $2 a move. So you could put $60, okay? Now, your stop loss would go right here above this candle. All right, your stop loss is always going to go to the candle next to the bar you got in on. And you never want to lose more than that bar. Okay, so again, your stop loss would be here. You don't know how much this is going to move, right? You don't know how much it's going to move. all you could do is get ready for it, right? And you'll have to manage your risk relatively quickly. So possibly you could potentially put your stop at $20 maybe. So 60 to 20. Okay, these are things you're going to have to determine. You're going to have to decide that. So now, when you get your order ready, all right, and you drop it there and it gets filled, your stop's automatically going to pop up and you take profit. So then, as it's doing its thing, you go ahead and do yours. You bring your stop right down to below that candle, and you bring your profit target. You never, ever want to look to capture the entire move. Go halfway. Aim realistically so you get filled. Okay? Don't be the guy who was up $30, right? But didn't feel like closing his position out because he was greedy, and then it came back and took out his stop. All right? If you're that guy, you're never going to make it in this game. Okay? When you're trading high probability setups and high probability areas, the odds will always be in your favor if you listen to what I'm telling you. Don't be greedy. Capture a fraction of the overall move. You're a new trader, or you're a trader here that's been consistently losing, and there's a reason for that. I'm laying the foundation for you guys, okay? What you do and how you build on that foundation is up to you, okay? But once you master what I'm teaching you, all right, we only traded in 4 areas today, 5 contracts per area. Average trade time was 4 minutes, and we made $10,000, almost $500. Okay? In time, it doesn't matter where you start. What matters is how you learn, how you develop, okay, your skill set, your emotions, your entries, your exits. What you do now is going to determine where you come in the future, or who you become in the future, or how good of a trader you become in the future. Okay? The trading journey isn't like the gurus teach you. Okay? Sign up with us, get alerts, make $5 million this month. They're full of garbage. Stay away from them. Run. Okay? Any consistently profitable trader will tell you it took years to get where they were. You're taking baby steps. You're learning to master a career that 95% fail at. Okay? Why do you think that is? Listen to what I'm telling you guys. Be patient. Be willing to learn. Put in the time needed to learn, and you're going to be successful. All right? You have to have a desire and a willingness to learn how to become a consistently profitable trader. And you're not going to get there gambling. You're not going to get there being greedy. Okay? First, you got to build up the confidence. All right? Get winning trades under your belt. Okay? Get rid of the negativity in your life. Get rid of the negative thoughts, the negative emotions, and all of that stuff. All right? Okay, so a few hours ago, 11, what time is it? An hour and a half ago, I told our traders the markets, we already made our average true range in the markets, and I told them the markets are most likely just going to trade sideways from here on out, right? Sideways, potentially higher, right? If they were going to continue. And look what it's done. Now, do I have a crystal ball to see that? No, I don't. What do I have? I have experience. All right? I've been in this game for a very long time. I've seen how the markets move. I know how the markets react. Okay? I know what the markets do on certain days. I know how they're going to move before news. Okay? You're not going to get all that information even with me spoon feeding it to you. That's going to take you time to acquire. Okay? It's not going to happen overnight. All right? But in this little dip right here, we made like $3,000. This was one of the trades we took. All right? Why? Because the odds were in our favor. Okay? The odds were in our favor. The odds were in our favor. All right? When the odds are in your favor, don't think, just trade. Okay? Trading isn't about overcomplicating things, okay? Trading isn't about saying, look at, oh, I'm not going to get it, I'm too scared, oh, this thing is still going up, and then you're the guy that buys here. And then what happens? Okay? When you learn to become profitable, when you are able to see things without thinking about it, you don't wait. Boom! You get in. You jump in down here and you're selling up here. Right? You're selling to all the people who waited. Okay? This is nothing more than a transfer of wealth, right? It's a money game, okay? It's taking wealth out of the uneducated and putting it into the educated's pockets. Okay? This is like a college. All right? That's all it is. It's transferring money around from the uneducated, the uninformed, and putting it into your pockets. Okay? So there's a little summary. All right, guys? So let's go back to the charts again. Right after this range formed, okay, I noticed we started developing another range. At the time, I marked it off like this, okay? But then, when we created this low, all right, I went ahead and marked it off like that. And then when we created this low, again, time and time, down and down, until eventually it turned into a range, right? That's how you want to start looking or preparing for a range. Now, if you had this marked off as a range, right, would you have traded this breakout? You'd be a fool if you did. Why? It started from the top. Big bars, right? You're not going to trade that. You're going to wait. If anything, you're going to trade it back up, right? But that's not how you trade. We are relying on certain setups, certain areas at certain times, okay? If we don't have enough information, then we wait, right? Trading is the easiest, boringest job in the world, right? But if you can master patience, guys, this market now becomes your very own personal ATM machine. And it'll just spit cash out left and right, left and right, left and right. Okay? But you have to be patient. Okay? You have to be patient. You have to wait for setups to appear, right? You have to wait to be trading in the upper 50%, in the upper 25%, okay? Don't get faked out, okay? This was a very big bar leading up to that, okay? Now, let's talk about that. Why did that bar not work? Well, what did I just tell you? You have to look left. Where would your potential profit zone be? I mean, you got very little room. That's it. That bar broke out, and that was your profit zone. That was not a high probability trade because we had, unlike back here, where we had space to the upside and the downside, over here, we have a wall right above us, right? We got this brick wall that formed. This range, okay? So that wouldn't have been a trade you wanted to take, even though the criteria was met. The probabilities were very low that that would have worked. Okay? On the second one, you started from the bottom of the 25%, but the breakout bar was very big. And again, the odds weren't that great because most of the people who lost on that one weren't going to engage on that one because they just lost, right? Okay? So where did the high probability trade end up coming? It came when price broke and retested the roof level. Okay? When it broke through support, retested it. I mean, it broke through resistance and retested it and actually held it. That would have been a good trade. Okay? You had a very small entry candle with a very small stop and a big profit potential. Okay? Now, I know this is overwhelming. I know it sounds confusing, but you're going to have to keep watching it over and over and join us live while we training live. Okay? I'm designing this boot camp to teach you everything you need to know so you have no questions when you come with us in the live training and trading room. Okay? I want your questions because I don't want you touching a dime of your own money until you have no more questions. Okay, but these videos are being designed to answer your questions, but you might have to watch them several times. Okay? By now you should know how to identify a range. Okay, you should know how to set up the range. Okay, you should know your 50% mark, right? You should not be looking to trade a breakout unless price traded in the upper 50%, which it did here, and the higher probability trades are going to be in the upper 25%. But you must look left to see where you're going to have resistance. You must look left to find your potential profit target. Okay? These are all musts. Okay? All right, guys. So we're going to jump back into the classroom, and I'll see you again in a little bit. Good morning, trading family. Hope y'all are doing good. So here's another live play of trading the breakout.
Order filled.
We have 4 contracts. We're up,
Order filled.
well, we were up about $700-800, and we got 2 filled. Notice where my profit targets are. Okay. Notice where my profit targets are. We did not trade this breakout, and I'll explain that in a minute. Okay. I'll explain that in a minute. We're going to go ahead and close out our second one just above that one. We took most of our profit early. Okay? Remember, the name of the game is to lock in your profits. All right? Lock them in. Okay, so we had 2 beautiful ranges, which are here in the 30-day boot camp. Just so happens while I was trading today, we had some beautiful moves. Okay, and as you saw on the screen, we were waiting for a candle to close above, but the reason we didn't want to take the first breakout is because we have another range directly to the left of us. So typically they're not going to work, and even if they do, you have to remember, guys,
Order
we got
filled.
1 left. All right, so we're up about $1,000 so far. All right, if you look left, okay, is there much room for this to run before we hit resistance? The answer is no. Okay? The answer is no. This breakout, we had too much congestion right there, which is why it did not work. Okay? We had another range right to the left of us. Okay? So the first one, even though it was in all the right areas, okay, if you look left, remember, price is only going to go to where it was in the past. Okay? So your profit potential was not good on the first try of that breakout, unlike the second try. Okay? This candle broke out. Okay, traders were kind of hesitant because of this. They probably got burned on that one. Okay, so be patient. Okay? Always be patient and let the trades come to you. All right, so now you've seen us trade it down or down live. Okay, I wasn't talking in that when I was writing. Okay, So we traded this area to the downside, just like we should, and read all the writing in the video, okay? It didn't immediately do what it should have, right? It should have came right back down, especially with a big move up, okay? We know that it's not going to break out on a big move up starting from ground zero, okay? When you're in a range and you're starting pretty much from the bottom of that range, here or here, big moves up are not going to make a breakout happen, okay? So we knew once we started seeing it not come directly back down to lock in our profit and adjust our take profits, okay? And that's exactly what we did. All right, remember, when you're trading a range, you're only trading to the downside when it's on top and to the upside when it's on the bottom, unless you have a breakout and you're in the top 25% of the range. This would be 25%, this would be 50, this would be 75%, okay? 25, 50, 75%. Okay? You always want your price action to be in the top 25%, which it clearly is. Okay? It's clearly trading in the top 25%. And then you're waiting for that breakout. Okay? But because we have another range directly to the left of us with absolutely no room to spare, don't take that first breakout. If it does end up running and you miss it, better safe than sorry, right? The first breakout when a range is right next to us directly to the left, okay? Remember, we have to fight the price that's already there. Okay, so your profit potential, for one, is not big. Okay? Even the second one would not have been a high probability trade because of the big bar. Okay? Big bar didn't work. Big bar didn't work. Could it potentially have worked? Sure, it could have. But if you want to be consistently profitable and take trades that make you money, okay? That make you money, you must be patient. Let it do exactly what it did. It pulled out of the range, and it pulled right back down to the range. Okay? Remember, we're always looking for those specific patterns, right? 1, 2, boom. Now this is a major momentum candle, okay? And it likes to shoot its energy, okay? It shoots its energy to the right, okay? So major momentum, pushing its energy to the right, okay? We put our take profit right up there, but now it's kind of struggling, right? But we got all of our orders filled except one, okay? But now we broke out of that range, so now you can make that decision, you know, should I close it out here for the profit or should I just wait? Well, let's look left for the answer. Okay, let's look left for the answer. Right now, the momentum is 100% to the downside. All right, where is our overnight? Here is yesterday's close. Okay, so right now we're 100% net long. All right, but let's look left for the answer. Notice where price stopped. Okay, notice where it stopped. All right, could have stopped here, but these two were kind of that test of that area. But it came right up to it and it didn't fill us, all right? That's why I always tell you, take your profits early, right? Don't be greedy. But if you're taking multiple contracts, you can let one run. Okay, we happen to let two run. We put one just below that price, right? The one that just got filled. And then we let this one run right up to that price. Okay, this is the risk you're going to run when you let your runners run, okay? So now what should happen, okay, if we look at this area, we should get the 1, 2, reversal. Okay? Now we should. Does that mean it's going to happen? Absolutely not. But we can look down here and say, okay, you know what? We still have strength. We're trading above the 50% mark on the RSI. That's in our favor. Okay? If it breaks that, then go ahead and close it out. All right? We're still up on the trade, right? We made a lot of money on that one trade. Okay? But now is the time where you, as a trader, must decide. I can't decide that for you, right? It's always best to lock in your profits. But what we're waiting for is to see if this will come down to the 50 and then run back up. Okay? So we're looking for it to come to this area where it's currently at. Let's draw a line without the arrow, all right? So boom, we're looking for this area for the support. Notice right where we are, okay? And we're looking for that that, just what we saw here, that 1, 2, blast off, okay? 1, 2, blast off. All right, so since everything right now looks good, I'm going to go ahead and keep that on there. But what I'm going to do now is manage it, okay? I'm going to bring it down, anticipating that we might not make it back up here, okay? And this is what you need to do as a trader, okay? We already locked in profit, okay? We can't lose more than we already made unless we let this come back down to here. We're still not going to lose more than we made, but if it starts coming down here and you haven't closed it out, well, then you're doing something really, really wrong, okay? You don't want to let this come. If this doesn't hold this level and a candle closes below it, you're closing that position out. You're not even going to let it come back past there, okay? Your stop should have been below this candle right here, but never let it come all the way back to your stop when you know it's not going to work, okay? So how do you know it's not going to work? If it breaks this mark, then the odds are not in your favor for it to work higher, okay? Remember that. It's all about the odds and managing your risks. I'm going to go ahead and close that out for profit, okay? I'd rather be on the safe side, even though we could still see this run up. We are done with that trade, okay? Trade is done. We're out. We're up almost $1,000, if not $1,000. More than most people make working 2 weeks, 80 hours. And we did it in 2, 4, 6, 8, 10, 12 minutes. We locked in 90% of that in the first 6 minutes. Okay? All right, guys? So this is how you become a consistently profitable trader. All right? Lock in your profit. Mark off your areas. If it's not going to work, don't ever let it come all the way back and hit your stop. Get out. Okay? Get out. All right? We've been ranging all day, so to grab that type of a profit is a beautiful play. Beautiful play, okay? So right now, we're up almost $3,000 on the day, and I traded this morning, I traded this area live with you guys, okay? I traded the break over here, okay? So 1, 2, 3 trades, and I'm up $3,000. How many traders do you know can say that? All right, and now it did exactly what we said. It's shooting its energy to the right. It did hold here, okay? And that's awesome. But you know what? It's a done trade. We already traded it. We already made our money. Don't go getting crazy saying, "Oh, look, let's add back in." No. That is not how you trade, okay? You're looking for specific areas to trade, specific locations, okay? With specific rules. You don't ever enter a trade because you think it's going to continue higher, okay? That's not how you become consistently profitable in this world. If you ever want to leave your job, you need a reason to enter your trade. You need an area to put your stop, right? There has to be indications that we have strength in the right position with multiple other confirmations. This is how you stay in the game for life. Okay? For life. When you start taking trades like this and chase it, that's how you blow up account after account after account. All right, now let's look left. Any one of those areas, price could have reversed. And it chose the first one, okay? So know what you're looking for before you get into trades. You should not be getting in a trade unless you look left so you have an idea of where the price is coming to, okay? Put your take profit below the area so you're guaranteed to make money. Don't be greedy. Okay, if you have 4 or 6 contracts, then yes, take most of it off early, let another one run and another one run, just like you saw me do here. Okay, but keep monitoring that position. Know where, if it's going to break, don't let it come back and take all your money, right? Even though it's one contract, if you know it's not going to work, then why are you going to let it come back and take the rest of that money? Don't be a fool, okay? Don't be a fool. Don't chase it. Don't be a fool. We're trading in specific locations with specific criteria, okay? I can't stress this enough, okay? When you plan your day, when you set up your charts, okay? When you have your zones, when you have your price levels marked off, all right? When you have all this information, then you can trade. Because then trading becomes very easy and predictable. You know where price is going to go, right? You know point A and point B, and you're going to profit in between. You're not going to be greedy, okay? Because with one contract, yes, we're starting off slow and safely until all of y'all get the hang of this, okay? Once you master the ranges, then we're moving on to another strategy. But until then, you're only practicing in the simulator with one contract, okay? You can clearly see on the NQ, we're trading the MNQ. But as you graduate each day and you master each day of the boot camp, and your confidence level soars because you finally, for the first time in your life, have plans, you have profit targets, you have goals, you know where the stock is going, you have no doubt in your mind, okay? You know what trades to take, what trades not to take. Look left and you'll have all the information you need. Okay, guys? I'm not trying to sound harsh. I'm not trying to yell, but I want to bang it in your heads. Bang, bang, trading. Bang, bang, trading. Bang, bang, trading. Okay? I want you to hear my voice when you see a first breakout, when you have a range right to the left of you. Okay? Remember my voice. Remember my voice. Remember my voice. Remember my voice. Okay? You have to know how to play this game if you're ever going to make it in this game. Now, look what would have happened had you chased that up, right? Why did it turn? Because it was in a specific area, right? In a specific area. Okay? Don't get caught up in the hype of greed. All right? Don't get caught up of seeing the posts out there. You know, I can tell you from doing this, I've been contacted by certain platforms asking if I could trade live with their platform. Fake. Okay? I've heard other YouTubers been contacted the same way. Granted, for me, this one actually wasn't in the US, or I would have reported them to the SEC. Okay? But if I ever get contacted by a company in the US for that reason, I will immediately report them. All right? Because they want people to trade fake accounts, and it's an account that's not even hooked up to the actual market. All right? It's skewed to help them win every single trade they take. All right? If I ever get contacted like that, immediately I'll file a lawsuit and report them. Okay? So be leery of what you see out there on the internet, okay? If you ever want a shot at this, you have to know how to play the game. And once you finally get it, guys, it's like taking... Oh, it's so easy, guys. It really is. It's going to take you time to get to where I'm at, okay? I'm not going to lie to you. There's a lot of information. There's a lot of moving parts, okay? But you're seeing them here. You guys are with me every day now, which I am so thankful for, okay? But you're seeing it unfold live right before your eyes, okay? I'm teaching you in a live market, okay? And that's what you need. You need somebody who can teach you. You can see it in real time, as opposed to like the pictures you just saw, all right? The training parts you just saw of our 30-day boot camp, okay? You need to see this in real time, okay? Because outside of that, it could just be somebody cherry-picking charts, right? Every YouTuber I have seen, not all, some of them do trade live, right? Some of them are very transparent, okay? But most of them don't know how to trade. And in my opinion, they're just gambling with a large crowd, all right? We're trading, and we're actually making money consistently, okay? There's a big difference of trading and winning a couple of trades. Anybody can do that, right? They did a study one time back in the day where on Wall Street they let monkeys throw darts at stocks, and I think it was like 8 out of 10 of the darts that the monkeys threw, the ticker symbol it hit, those made money, okay? So even a monkey can make money, right? Gambling, just throwing darts, right? In this kind of market, it's a lot harder to do that, I will admit, but like you saw during COVID, everybody was making money, right? Everybody. But what you don't see now is them. They're no longer in this game. They lost it all. All right? All right, guys, so this is going to be the end of the live clip as far as drawing your ranges, okay? Seeing what you guys just saw, taking some live trades. All right, so if you need more time on how to develop a range, how to trade a range, keep watching this video, okay? Keep watching this video. Join us live, okay? If you're in the boot camp, you can join us live, all right? But we don't want 100,000 questions, because all your answers are going to be answered in the boot camp, okay? Everything you need is in this boot camp, all right? So I'll know if you're watching the boot camp and you're just asking random questions, because the questions you're asking are already answered in the boot camp, okay? So watch it, rewatch it, watch it again. Watch us trade it, okay? I'm going to be doing it just like this every day. I'm going to draw the areas out, okay? So if you're not able to watch us live, watch the replay, all right? If you have questions, email us or send me a message on Discord, okay? And I'll get back to you, all right? But when we're trading live, that's not the time to be asking questions, okay? When you go live with your own account, you should have no more questions, okay? And if you go live and you still have questions, then something's not right. You didn't listen to what we said, and, you know, I can't be responsible for you, all right? Like I said in the beginning, I want people who want to become consistently profitable. I know people are going to have questions, but I'm not your babysitter, okay? I'm teaching you, and I would expect you to learn from what I'm teaching you, all right? It can't get any clearer than this, all right? It just can't. It can't get any clearer than this, okay? It can't get any clearer than to look left, okay? It can't get any clearer to have a plan, okay, guys? All the information you need is in this boot camp, and it will be, All right, you're only on day 6. You're learning the range, okay? And I know it's complicated, especially if you're a new trader, but join us live, okay? When we're training, all right? Join us. Rewatch the videos time and time again until you get it. Practice in the simulator account, all right? Practice. Find these zones. Build these zones, okay? You're going to find your high. You're going to find your low. You're going to mark it off, and you're looking for that the 50% mark, okay? You want the meat of that range where you're going to make your no trade zone, all right? You're going to have 25% left above you, 25% left below you. You're going to make it look like a doji candle. If your range does not look like a doji, then you set it up wrong. Okay, how simple is that? If you drew a range and it doesn't look like a doji, and you don't have areas where price tried several times to break out on either side, then you did something wrong. Go back and watch the video, okay? Don't come to me and say, hey, I took a trade, to the breakout, and I go back and look at the chart and it started from your 75% mark. Okay, don't be that guy to come to me and say, hey, I didn't make any money when this broke out. Okay, don't come to me when we have a double range, and tell me, hey, we were trading in the upper 25% like you said, okay, and if a candle broke out and I lost. Okay, well, did you look left? Because I'm going to ask you these things. Did you look left? Where was your potential profit target on that trade? Where was the range to the left of you? If it looks like this, then you should automatically know not to take that trade. Okay? Even though we were in the upper 25%, we had a really big push to the upside on that initial igniting bar, and we had way too much congestion to the left of us. Okay? You're looking for areas where you have at least some space to run, okay? So this tried once and it tried twice, okay? But again, on both of those, even though we're in the top 25% of that range, guys, the biggest challenge you're going to face is the range to your immediate left, okay? Then you have these big bars leading up, and you're waiting for that retest, okay? Wait for the breakout of the range, and then the retest of the range. That's what you're looking for, okay? You're looking to buy on the next candle that breaks that, all right? All right, guys. I will see you again very soon. Love you. Text me.
I love you. Order filled. Order filled. Order filled. Order filled. Order filled.
Good afternoon, trading family. All right, so this is going to be kind of the final video, all right, as far as identifying ranges and setting them up correctly. All right, so let's just go back to Friday's trading day, all right, and see if we can't find a range. All right, I can identify one right here. All right, so let's go over here, get our shapes, get our rectangle, and mark off that range. Let's double click it, get our borders purple, opacity to 0. Let's thicken those borders up. Okay, remember, we're trying to identify areas where price could not break out from above or below. Okay, now we want to measure our range, okay, from the top to the bottom and the bottom to the top. All right, we want to identify, break it down into quarters, 25%, 50%, 75%. All right, so you have the upper quarter, the lower quarter, and the middle 2 quarters. All right, now what we're looking to do is get the 50% mark of the range. All right, so that you have an equal amount above and an equal amount below. This is now your no trade zone. You absolutely, positively never trade in the no trade zone. Okay? Now that we have that marked, let's go ahead and see if we could find another one. Here's one right here. If you guys see that, let's go ahead and mark it off with the tools. Go to shapes, rectangle, change the color to purple, opacity to 0, thickness. Now let's get our no trade zone. Remember, you're looking for the 50% mark, 25% above, 25% below. All right, so now we have successfully identified the same 2 again. Now let's go look for some more ranges on the chart, micro ranges. Okay, I see one right here. All right, there's another range. Let's go ahead and mark off our 50% mark. Looks good. Can we identify any more areas? How about this guy right here? Looks good. Let's mark off our 50% mark. All right. Any more? Not as far as sideways ranges go. Okay. Now let's talk about trading the range, all right? What are we looking for? What criteria must be met? Okay, what we're looking for to trade the range is we can trade the range at the highs back into the range or the lows back into the range. Okay, you never want to trade in the no trade zone. Okay, so let's go ahead and see if we can identify some good trades. All right, we live traded somewhere. We took a couple of live trades, but let's discuss it, okay? When you're coming down here, all right, remember, when we're looking to trade a breakout, the trades must take place in the bottom 50%. Okay, so if you have 100% of your range, the price action must be trading in the lower 50%. And the highest probabilities are going to take place when you're trading in the bottom 25% for a potential breakout. All right. So if you're looking to trade a breakout, that's the criteria you are looking for. All right. You want to be in the bottom 50%. And the high probability breakouts are going to come in the bottom 25% of the overall range. Okay, so what you're looking for on the breakout is a candle must close outside of the range, outside of your purple line. Okay, that candle must close outside of the purple line. All right, in order for it to be considered a breakout. Now, what else do you want to look at? Well, you want to look at your RSI. Okay, down here in this area where price is making lower lows, but the relative strength index is making higher lows, the odds are not in your favor for this to be a breakout. Okay, instead, you would be looking to buy this to go back into the range. Okay, and we never did get a candle that closed outside of your range. All right, what did the price action do? It made a lower low, and then it double bottomed. That's what we call a double bottom. Your relative strength index kept making higher lows while price made lower lows. Okay, this is confirmation that price is not getting ready to break out, but it's getting ready to retrace and go back to the upside. Okay, so whenever you're trading back into the range, make sure you have some type of confirmation. Don't just get in the trade because it's down here, right? This was actually giving you all the signs by being in the bottom 50% and then trading in the bottom 25% of anticipating a breakout, right? But the RSI was giving you the opposite information, okay? The divergence was warning you shouldn't be trading a breakout. Even if a bar closed red, this should have stopped you from taking that trade. The divergence alone, okay? When you see divergence, the odds are now not in your favor to trade a breakout. All right? Now let's look over here. If we were looking to break out to the upside here, well, the criteria was met. We were in the upper 50%, right? Now we were in the upper 25%. But what happened? No candle closed outside of our range, right? And the RSI was giving you divergence as price was making higher highs, right? The divergence, the RSI was making lower highs, indicating that a breakout was not going to happen in this area, okay? And if you follow our rules, which require a candle to actually close outside, right? We're not looking for a wick. We need an actual body of a candle to close outside of that range, okay? Like this one. That one actually closed outside of the range, right? All the criteria looked excellent for this trade. Again, we were in the top 50%, and then we started trading in the top 25%. We call that the money zone, right? But what was that lacking, right? Why would you not have taken that candle? Everything was perfect except this. All right? The RSI, the strength was getting weaker, right? You had divergence. Your RSI was making lower highs as your price was making higher highs. Okay, so that would not be a high probability trade. The high probability trade there would have been to short the market, right? This would have been an excellent bar to sell, especially with your relative strength making lower highs while price was making higher highs. Okay? So again, the criteria was actually met in both of these conditions, both of these scenarios. However, the RSI would have kept you safe. Okay? The divergence, while price was making higher highs, the RSI was making lower highs. That would keep you safe. You're not going to trade a breakout based on that information alone. Okay? So even though this candle did close outside of the range, with all the criteria being met, the RSI wasn't supporting a breakout. So do not take the trade. The higher probability trade would be to the downside. Okay? Now, let's come over here and look at this range. All right? What do we have here? Okay? Here, on these three, we just have 1, 2, 3, right? The RSI was actually making higher highs, right? Again, when your relative strength index is up here in this range, okay, that means that it's oversold. Okay, now you can't look at that like in literal terms, okay? Because notice here, it was considered oversold, but it just kind of turned sideways, right? Just kind of traded sideways. This is a perfect example of why you cannot rely on that alone to just say, okay, it's oversold, I'm going to sell, right? Because had you said that right here, right, that right here on this bar, you would have got wiped out the entire day, okay? Because this can happen. Is it common that that will happen? It doesn't happen very often, but it does happen, okay? So, when you have three areas, 1, 2, 3, right? You have big bars leading up to that area. Your RSI is oversold. The odds are in your favor to short that back down into the range, okay? Now, let's move on a little more, okay? When you are trading a breakout of a range, okay? Actually, let's back up. Let's focus on this breakout of the range, okay? Here, we were trading in the bottom 50%, and then price traded in the bottom 25%. That is our money zone for breakout, right? Now here, okay, notice the price action at the time of that breakout candle, right? I mean, the right RSI. We didn't have divergence, right? We had a flat bottom and we had a flat bottom, okay? So we didn't have divergence, which would tell us that, hey, this is most likely going to break out now, right? We didn't have divergence on this side like we did back here in this range where the RSI made higher highs. Here it was just flat as price was flat, okay? Now, how would we trade this breakout? Well, when we enter the trade, first we need to wait on a bar to close outside of our range, okay? When that bar closed outside of our range, let's go back here. Okay, when this bar closed outside of our range, let me just back up again, because here again we have a bar that closed outside of the range. But this started, the move started from way up here. All right, so when it starts up there, the odds are not in your favor, okay? Even though we're in the bottom 50%, right? The odds are not in your favor to trade a breakout on such big bars leading up to the breakout, okay? Your odds are going to be much better to break out when we pull down and then we start trading in this lower 25%, okay? That's when your odds are going to be in your favor, all right? The probabilities are much better when price action trades in the bottom 25% of a range for a breakout, okay? So we would wait for this bar to close. We would left click, get our sell ready.
Order rejected.
Oh, well, the markets are closed now. All right. We would have it ready, and then we would drop it in right here on the close of that bar. Notice price pulled back, so when it went forward, it would fill us, okay? Now, where would our take profit be? Well, for that, we want to look left. Okay? Our first price target, let's mark off these two areas. All right? Remember, you always have to look left for your profit zone. This would be our first. And this would be our second. Notice we're just drawing these lines very small, okay? We're not making big lines. We just want an idea of where our potential take profit should be, okay?
Can you go there? I'll just...
All right, so we got a couple of these marked off. Now let's go back and look at price action. And look how well they respected those lines, even the last one that we drew. And if we actually drew them all, they would probably all have been respected. So let's just do it for the sake of the video. Let us see. Now look at that. I mean, is that not unreal? Almost every single line we drew, price respected it in the future. Alright guys, this is why it's so important to actually have this set up already before you're looking to trade the breakout. Okay, once you make a range, always go and mark your areas to your left, above and below you, so you know where price could potentially reach. Okay, so even here we have several areas above us where we could potentially see price reach and where we are looking to take profit. So we're doing this in the past, right? So we can rely on it in the future. Go ahead and get these drawn. Now, on this breakout, if we would have traded it, okay, it had the potential to stop right here. All right, so there's not much room for profit. Okay, you're looking at a $5 profit, but that would have been a $10 profit. A $5 move, you get $2 per dollar. So your potential profit target could have been just that $5. Okay, so right now that we're trading in such tight ranges, all right, you're not going to be looking to get rich. Again, you're looking to minimize your size, your positions, because of the overall market conditions. All right, so if we were going to trade this, we wouldn't want our take profit to be all the way here, okay? Even though it's not that far, right? Because we don't know if price is actually going to make it there or not, all right? We don't know if price is going to make it there or not, and we don't want to be greedy, all right? You want to lock in those profits. You know, a dollar's a dollar, okay? And you're beginner traders, you're learning how to trade. Get comfortable winning trades, okay? Learn the basics, learn the foundations, and later in the future, you can adjust your position size how you feel fit, okay? So what we would be doing for our take profit, we would be looking to capture maybe $3 of that $5 potential move, okay? So we're guaranteed to get that profit, all right? Again, we're starting small, and it just so happens in this range, the breakouts, right? There wasn't much room for this first area where we could potentially see a reversal, okay? The second area, which it did come down to, right? Now, later in your trading career, when we're trading 3, 4, and 5 contracts, well, that's a different story, because then we're going to take profit and we're going to leave some on to run to this next zone. But right now we're trading one contract with a $500 account. We don't want to be greedy. We don't want to get stopped out. We want to win every trade we take. Okay? So listen to what we're saying. Know where your take profits are. Look left. Do not, I don't ever want to see you guys trying to hit that full profit potential. Ever. Okay? If this is your range right here from the breakout to your first potential area where you're going to get resistance, okay, that's it. You're not looking to trade that whole area to the second one. You're only focused on this little area, okay? It doesn't matter what price actually does, all right? If you want to become consistently profitable, listen to what we're teaching. Again, this is a foundation. In the future, you can go on and do whatever you'd like, as long as you keep the basics of the foundation, okay? You can trade more contracts. You can let ones run. Okay, but for now, focus on what we're teaching you. Trade the way we're teaching you. All right? Remember, the markets like to repeat these types of patterns. Okay, when they break out of a zone, they like to come back up and retest it before they make the next move down. Okay, you guys see me constantly drawing these patterns, right? Constantly drawing these patterns, right? Constantly drawing these patterns. Okay, there's a reason for that. That's how the market moves. All right, so after that breakout, job well done. You won your first trade. All right, now we're waiting for our next trade setup. And there's plenty of trades here, okay? Like, you'll be learning how to trade like this, okay? You could consider this a range, all right? You have divergence while price is making lower lows. You could be looking to go long. You're already expecting that 1-2 reversal. All right, guys, but we're not to that stage yet. Right now, we're teaching you how to trade a range, all right? We're only teaching you right now in the range to trade the tops down into the range and to trade the bottoms back up to the range. And we're teaching you how to trade the breakout of a range. All right, you're going to learn all these other ways to trade after you learn this. All right, so now let's look at this area. All right, we had another range. We marked it off. Okay, now here was the first candle to close. All of our criteria was met. We're in the top 50%. Now we're trading in the top 25%. Everything looks good, except when we look left, right? Our first and second profit potential. Let's get our line so you can see it. All right, here's our first profit target. We'll put them in yellow. Well, I guess it like purple instead. There we go. And then our potential second area for profit would be right there. What's going on here? Let's make that yellow. Okay, and this should already be set up before you're looking to break out, okay? Again, just like we did down below. Let's just add some more, finishing it up here. There's our second, third. Now let's find our fourth. And then our fifth. All right, so now we have our potential profit targets. Okay, so would you trade this breakout, this candle? All the criteria was met, but what happened? It broke out and it hit that first, it came right to that first profit target. Okay, on two really big green candles. Okay, and we made a higher high, but the RSI made a lower high. All right, don't forget to look at your RSI. Okay, all of our conditions were met again. Okay, except we had too many problems for this to be a high probability setup. All right, we had divergence and we had the price come right to our first profit potential. Okay, so that's not a high probability setup with divergence, and you already came and filled right to that profit potential. All right, so what we would do nothing. We wouldn't trade. We would wait, see what the price action did. What did it do? It reversed and went right back into the range. All right, now here was our second candle to break out. All right, that candle didn't even make it to the first price target. All right, again, not a high probability breakout, especially after a failed breakout right before it. All right, even though the criteria is met, right? The criteria is all met. We are in that money zone. All right, we're in the money zone. Okay, we're in the top 25%. All right, now over here, we had this big volume bar take place outside of the range. Okay, so if you wanted to trade this, it stopped right up here again. But notice what happened here. Okay, if you consider this downtrend on the RSI, right, while the price was moving down, we now broke through that downtrend, right? We're not making lower highs anymore. All right, we broke out of that on that candle, right? On that candle. So now the odds are in your favor, okay? So you could have either bought that bar, right, with your stop below this bar, which is a really big risk, okay? Really big risk. Or you could have not took that trade and waited to see how it turned out. And what happened? We got the 1, 2, 3. So the better entry, you would have won on both of these, right? Whether you entered on this bar, on this bar right here, because your stop would have been down here, never did come back, or if you didn't want to take that bar and then you saw it pull back with all the support, okay, you could have entered on this bar when it came back up to this area. All right, and then your profit, again, you would have been looking to close out before you got here. All right, so it's not that much of a profit, but again, this is an area where we have two ranges, right? Side by side, two ranges, okay? So the odds are not in your favor for this to continue really high, right? Because you have so many levels where price is going to stop it. And notice, every level we drew, price stopped it, right? Or used it as resistance, okay? Now here again, on this next micro range, okay, we run right back into the same problems, all right? You have a range immediately below you. So to trade a breakout, right, where's your take profit going to be? Right here. Notice where price stopped, right? So that's not a high probability setup. Even this bar, right? Where's your next potential take profit? Right here, right? So trading this breakout back into another range is not a high probability setup, all right? So you just stay away from little micro ranges like that don't have the potential for big profits, okay? When you're going to have resistance at every, $5, don't be looking to trade, all right? Stay out of it. Wait for the better setups to come, all right? Remember, there are many factors when you're trading, such as time, such as 8:30 is a major time frame because there's a lot of economic data, right? The closer you get to 8:30, 9 o'clock, the closer you get to the bell, the more traders are going to come in and the more these setups are going to work better, okay? Now, let's look at our last range. Again, beautiful. Now, I didn't look left here. I'm not going to do that. I think you guys know that by now. You're looking left to identify where your potential take profit could be. Let's just go ahead and look left. Let's mark off this line. Mark off that line. And we'll mark off this line. Alright, so now we have three possible areas to trade this breakout to. Again, look how well looking left will serve you, right? Just look how well you can predict your take profit levels, all right? Again, we're only trading one contract, so we're anticipating price to come up to that level, okay? Where our profit target level is right here. So where do I want you closing out? You know, somewhere around here. Don't try and get the whole potential, all right? Even though all the odds were in our favor, right? We have great bullish momentum, right? Beautiful bullish day. But on this day, this was Friday, we had no news. We didn't have anything to cause this massive run up, okay? So you got to be cautious, all right, when you're taking these trades. But the criteria was met. We were in the top 25%. You know, our initial candle broke out. We enter, and we're looking to take our profit quickly, all right? Again, you had big legs coming up here, but it did hold and range for 2, 4, 6 minutes before we got that breakout. All right? Your RSI didn't have any divergence on it, which was good. The divergence broke, right? So everything looked good. High probability trade, enter it. Don't think, right? Don't think and say, oh, you know, you should already... You shouldn't even be trading if you're still thinking or having questions, right? You're not trading like you used to trade, or if you're a new trader, we're not teaching you how people come up with these bad habits, all right? When you're trading specific things and strategies, you follow the rules and you enter that trade. There is no hesitation or second thoughts, right? It's not like we're just saying, hey, you know, I think I'm going to go buy this because this broke, you know, this is a really big green candle, right? We're not gambling. We have specific ranges. We have specific rules, okay? We have our stop losses. We have our price targets, all right? We have everything in our favor to take that trade. So why would you hesitate on taking it? All right, guys? So this is going to wrap up the range strategy, all right? You have learned how to identify ranges, right? Areas where price could not break above or below. You have learned how to set up your no trade zone. You have learned how to enter the trades in accordance with the relative strength index. You have learned how to buy the bottoms, sell the tops, and you have learned how to trade the breakouts. So congratulations, guys. I will see you in day 7. If you have any questions, email us, but master all of this information before going on to day 7, okay? Become a master of this information. Right after I get done speaking here, there's going to be a little introduction to the RSI, but I really want to keep that in day 7, the beginning of day 7. So master what I already taught you about the RSI and the divergence. Master setting up your ranges. Master trading the tops and the bottoms back into the range. Master trading the breakout. Master looking left for your areas of take profit. All right, guys? Any questions, email us, DM me in the comments on Discord, and have a great day, and I'll see you again soon.
Oh, hey, didn't see you there. How do you like my dance moves? Well, anyway, let's do a quick recap of what we learned so far. As of now, you should be able to easily identify a range on your charts and set it up properly, using 4 equal quarters. The 50% in the middle is your no trade zone. Next, you've learned how to identify and trade the tops and bottoms correctly. You've learned that trading in the upper 50% is where you will start looking for a possible breakout. And in the upper 25% is where the breakout will most likely occur. and give you highest probability of breaking out of the range. And the same is true for a breakout to the downside. Remember that big bars starting for the bottom of the range will almost never work, so don't expect a breakout to occur if the move starts from the lower half of the range, meaning if the move started from under the 50% mark. And finally, we've learned to look left to find our take profit zones, and how to use the RSI to help you better time and confirm your entries from the top of the range back down into the range, and from the bottom of the range back into the range. Phew, that was a lot of learning, and it will definitely require some practice to master. So why don't you start finding ranges and practicing in the simulator account? You will want to keep a record your sessions using the OBS software for your journaling. Why is this important? Well, in order to keep track of your progress as a trader and learn from your mistakes, you'll want to keep detailed records of all your trades. And what better way than to do so by being able to go back and watch yourself trade? It will enable you to see what mistakes you made and give you the ability to look at it with a clear conscience, meaning you won't have the emotional aspect of being in live trades to hinder your judgment. We will talk more about this on day 7. Now you must remember you are only allowed to trade one contract of the MNQ, and you must use a stop loss and a take profit. Try and master this before going on to day 7. You can find the OBS software by going to www.obsproject.com. It's totally free and easy to use.